Going really well.
That's good.
Went to breakfast with a few of my family members. I haven't seen them in a while. Everybody's off
Um,
today.
on this Wednesday.
On a win, yeah, for
Oh,
for
Veterans Day. There we go.
Veterans Day.
Yeah, yeah. Or was one of your family members a veteran that you went to have breakfast with and stuff?
No,
Mm,
no, nothing
That's good.
close.
That's good. Just a good reason.
Okay, I think we're live.
Let's see here. I wonder, do me a favor, mute your Facebook Wednesday, and we'll see if the echo drops. Oh, Veterans Day. There we go. Yeah, yeah. Was one of your family members a veteran that you went to go have breakfast with? It's got a little lag. Just a good reason. Let's see here. I wonder. We'll see if the echo drops. Is that you muting it and I'm muting it? Yeah.
There we go.
Awesome, awesome. Okay. All right. Yeah, so what would that's right. I got my questions on the notepad and notepad is here. So let me do this. Saying something on my wireless connection. Okay, but anyway, we can get started. Even if the Facebook Live doesn't work because we have the Zoom recording. So tell us a little bit about the company that you're with, Samantha.
Yeah, so I am with Liberty Mutual Personal Insurance. I'm a local agent here in Austin, but it does cover, I'm licensed in the state of Texas, so I can pretty much reach anybody that needs help. We are a personal insurance company. Personally, I only do, again, the personal side. So really home, auto, life are the main things that I focus on.
Uh-huh.
And really we kind of fill in the cracks for whatever the client may need.
And do you work with multiple agencies or multiple different companies?
Yeah, so luckily, as a big company, Liberty Mutual has given their local agents brokerage capabilities. So I'm able to represent different companies to help better fit people's budget, better needs. If someone's looking for something specific and it doesn't necessarily fit in the Liberty Mutual guidelines,
Mm-hmm.
I usually have some carrier in my back pocket that can help people out.
And so Liberty Mutual almost acts as like a platform with multiple different arms, or like an octopus in a sense. You know, it's the Liberty Mutual is a body, but you actually have a lot of different, it sounds like arms or legs that you can divert to if Liberty Mutual's policies don't directly work out. Is that what you're kind of saying?
Yeah, well, definitely as agents, we're more of the octopus, I would say.
Okay. Okay.
Liberty Mutual is still for sure my main product, and it's something that I'm really, really proud of, and it's one of the best policies on the market in general.
Mm-hmm.
However, there are some, each company has different guidelines, different appetite risks, really, that they're looking for. And yeah, exactly like what you said. So, in case Liberty Mutual isn't the best policy for them at the moment, then I have something to kind of fill in the gaps or to take care of them or someone that they love for the time being. And then we put them where they best fit.
Hear that. What is one of the main products that you feel like that you service to your clients?
Yeah, bread and butter. When people think insurance, people think home and auto insurance. So home insurance and auto insurance is something that you pretty much need in order to, one, be on the road, and then two, buy a house. So typically that's the bread and butter. And people think of that, they always have it, but they don't always take a look at it. So it's always important to take a look. The other additions that we have are something like life insurance. It's not something that everybody has or thinks they need, but they just haven't spoken to the right people yet. So those are the three main lines, but have other policies like pet insurance and motorcycle and RV and whatever you've got, we can pretty much cover it.
So, just to take it back to the car and home insurance, sometimes I get calls from my insurance company, and they're following up 6 months to 12 months and basically asking me to recheck my policy. And sometimes I'm like, why would I waste the time to recheck a policy if it's going to be the same? Can you explain a little bit about how policies can change from month to month, or every 6 months or 12 months?
Yeah, absolutely. And that's a really good question. And it's something that a lot of people don't really see the value in. When you think about your home that you bought, 2 years ago, maybe not
Hmm.
much has changed in 2 years. But as the time goes by, you're now living there for 5 years, 10 years. Not only has everything else in the city completely changed around you, but the area that you're living has changed. So the value that you bought your home at is probably not the value that your home is at now.
Mm,
Especially in Austin, the construction and the value just completely increases.
yeah,
So if you are stuck with a policy that you bought 10 years ago, let's say you bought your house at a grand deal of $150,000,
mm,
which is, and you might well be over closer to $400,000 now. But if you have that same policy that you had 10 years ago without someone taking a look at it and without anyone advising you, hey, look at what your home is valued now versus what it was, and look at how you're insuring it as if it were 10 years ago. So policies like that are really important to tell, not only just on the coverage side of things, but there are other things where, maybe there's additions where you added a pool. Now you have a little bit more exposure and you
yeah,
need better liability coverage. Maybe now you have kids and you've got kids on the road, and you insured yourself as a single person, don't have a ton of assets. But 10 years later, you've got a house. Maybe you have a second residence. Maybe you have multiple cars. You have other people that are relying on that same coverage. So it's always important to revisit it, whether it be every 6 months, every 12 months at your renewal, or
hmm.
every 2 to 3 years.
Um, you make me think about one thing in real estate is, for example, South Austin is one of the places that's well known for the flood zone area that it's in. And so in some other areas that are kind of surrounding it, I almost kind of noticed that there may be areas that is highly affected by the flood zone, and then there are areas that are not at all affected by the flood zone. Are there times that you would recommend, hey, just check your policy to double check if something like a flood zone had changed, or if it has, if it increases or decreases your insurance?
Yeah, so flood zone is determined by FEMA, and FEMA does remap every few years. It doesn't happen very often, but just because you're not in a flood zone doesn't mean you are not susceptible to a flood. I don't remember the percentage, but a majority of people affected by Harvey in Texas did not have uh, flood insurance. And it's really unfortunate because flood insurance, it's a common misconception that flood insurance is included in your home insurance. It's something completely separate.
Wow.
And even though you're not in a flood zone, you can still obtain a really cheap policy, something that will cover the home from outside water coming in.
Got you. And so what's another common thing in insurance, pertaining to the home and or auto, that people don't usually get covered, but kind of regret that they haven't got it once an accident happens?
Well, unfortunately, that's the name of the game in insurance, and unfortunately, some people are in these situations where they didn't even know that it was possible to be covered until, like you mentioned, it's too late. One particular situation that I can really think of off the top of my head is, especially now during COVID times, many people have turned to being an Uber driver or a favored delivery driver or some sort of delivery service. Many companies unfortunately deny coverage for that if you never disclosed it.
Oh,
There are many companies that will cover you as long as you say, "Hey, I'm a driver." And unfortunately, if you call in and try to make a claim and you're like, "Yeah, I was delivering for so and so," a not so great company might just say, "Oh, well, you never told us that, so wasn't in your policy. we don't cover that. So there are many things that you should talk over with your agent, even though you think, oh, I'm just going to pick up this side hustle, I'm just going to make some money on the weekends. There is an exposure to being on the road. You think, okay, yeah, I'm on the road a little bit more. You're thinking about the mileage that you're adding, but you're not really thinking about the liability exposure that you have. And that's why it's always great to have a local agent that you can reach out and send a quick text and say, hey, I'm thinking about becoming a driver. Do you know how this would affect my policy? So local agents are a great way to, if you ever have any questions, reach out and see if you
Yes.
can get that
Please
question
do reach
answered.
out. Please do reach
Absolutely.
out to Samantha. I mean, she's very, very informative and very passionate about what she does. I mean, we had a really good conversation just about, being even in the technology age, how it's still a necessity to have a person to talk to and interact with, because a person is still there to uniquely tailor your situation. Everyone's situation isn't the same or cookie cut. And so that's one of the things that I really like about you, Sam. Samantha, sorry about that. I don't know if you get called Sam.
All the time. I'm
Okay,
Sam all the
okay.
time.
All right. But you did mention, some things that happen. Um, like, let's say I did pick up the side hustle, and I didn't pick up the phone and call you. And so now I am having to file a claim. Sam, can you tell us what a claim is?
Yeah, so a claim, and there's many different forms of it, especially we can just stick to auto for now. So a claim is basically anytime that there's damage done to your personal property. That's the easy way to think about it.
Mhm.
There's comprehensive and there's collision. So anytime you talk to your agent, they're going to say, hey, do you want comprehensive? Do you want collision coverage? When you think of a claim, that's exactly what it sounds like. You collided with another vehicle. Comprehensive, which is something that people don't really think about as often, is something where you did get damage from on your vehicle from another thing other than a car. So that could be hail damage. That could be some teenagers graffitiing in your neighborhood. That could be someone keying your car or hitting a deer or something that was damage that was done outside of that. On home insurance, that's most commonly your roof. If you have any roof damage from heavy storms, if there was any water damage from the inside, that's another really, really common claim, unfortunately, here in Texas. So if a water heater malfunctions, your dishwasher overflows, damages everything, that is the best time to file a claim after you get an estimate of what those damages would be.
And so, I mean, of course, immediately after something happens, you should file that claim. Is there a time frame that you have to file a claim for, just sticking to home or auto?
Yeah, definitely. I mean, you want to be a responsible homeowner, car owner, and file a claim as soon as possible. Obviously, some are more urgent than others, but there is a time frame, and it does differ between states. So you definitely want to check within your actual agent and your actual company. There is a
Mhm.
time frame of when that should happen, but you want to be responsible as a homeowner, a car owner, and file it as soon as possible to limit the damages and get those repairs in right away.
Gotcha. And so you make me go into the next question now. Let's say two people. Let's just say one of the person who files a claim, they get word back from you and your company, and you say, "Hey, we feel like this has happened." What is an adjustment in this case?
So an adjustment specifically is mainly on the insurance company side. You as a policy holder and a policy owner, you're pretty much needing to get an estimate of your damages. And then you can determine if it's worth filing a claim or not, because you still have to worry about your deductible. So once you actually get that estimate, you can determine if you'd rather take the claim. Sometimes the damages is significant to where you can't pay that out of pocket. But if you can avoid a claim and pay it out of pocket, it probably benefits you in the long run. If your deductible is just pretty much right around there. And you pretty much just, the estimate is the biggest, most important thing when it comes to determining on when to file a claim. And
Mhm.
then then the process can start on what exactly needs to get done. What does those estimates actually look like? What repairs and like in a car sense, should it just be completely totaled out, or are the repairs worth doing?
Are there instances where you recommend, hey, you have a little bit older car or you have a newer vehicle? I would recommend getting this covered instead.
Yeah, absolutely. So a lot of people think, once I'm not financing my vehicle anymore, I can go liability only. And some people, you could buy a 2020 vehicle cash,
Yeah.
and it doesn't necessarily mean you're going to go liability only. That car still has a ton of value. You pretty much want to think, I usually tell people about 12 years old is when the value really starts to go down, and your liability only coverage would be valuable in that case. Basically, that would just, if you still kept full coverage on an older vehicle,
Mhm.
it's likely that the damage is done. They're just going to total it out, especially with a really old vehicle. They may not even make the parts. It might be more trouble than what it's worth. They might just pay you out what the vehicle's worth. And
Mhm.
unfortunately, if you have like a 1990, could be just a few thousand, few hundred if you're lucky.
Right, right.
Um, and at that point, is it really worth having to pay maybe your $500 deductible and getting
Just throwing the car
$200?
away.
Right.
Just throwing
So
the car
yeah,
away.
exactly. So definitely, again, speak to your agent and get their advice and say, hey, do you think my 2001 Toyota Camry is worth carrying full coverage on? Or is my 2015 Nissan, is that still worth carrying full coverage on?
Yeah.
And you can kind of determine, and me as an agent, I can kind of paint the picture and say, okay, if you were to run into this scenario, are you comfortable pretty much essentially having no coverage? Or would you rather have that peace of mind and carry that additional coverage?
That makes plenty of sense. And those are just some of the few things that someone that you're talking to is going to point out, not necessarily a robot or a system that
Uh-huh.
gives you your coverage. And so
Exactly.
that's one of the great things. And like my brother is in here. He's in San Antonio. He's a master electrician up there. And so when you have people who, what's going on, bro? When you have people who have commercial vehicles in this instance, and they have basically different coverage that you recommend, what is something that you always recommend they get? Because sometimes we had a really good talk about uninsured motorists.
Mhm.
So in circumstances where you have people with their commercial vehicles, what is one or two things that you recommend they always get in their policies?
Yeah, I mean, I think the uninsured motorist it technically is optional in Texas, but it is one of the most invaluable policies or parts of coverage that you can have.
Mm-hmm.
For many people, they see that as an optional coverage and they're just, yeah, take it off. I don't need it. But for many people, that includes uninsured and underinsured motorists can cover you in the time of a hit and run. And unfortunately, that happens all too
That
often.
happens
That can also
more than we
happen.
like.
Exactly. And unfortunately, that's the coverage that pays out during that time. It's not, even though you have insurance, if you don't have this uninsured or underinsured motorist coverage, you might be out of luck.
Yeah.
Uh, that also happens again if let's say you do get in an accident with someone that doesn't have insurance at all, and they're nice enough to pull over, but just tell you, I I don't have insurance. You know in your policy you have this covered to where you could cover your vehicle for the amount of coverage that you elected. So that's a really, really important coverage. And I know personally, my family has gone through two totaled vehicles with uninsured motorist coverage.
Wow.
And it's no one ever predicts an accident, unfortunately, but you're
Mm-mm.
always glad you have that when you do.
Mm-mm. And I about probably about 10 years ago now, but I had liability insurance about 10 years ago on a different vehicle. And I ran into the back of a Ford F-150 of a dude who was actually out test driving the truck. So
Mm.
it was still a dealership vehicle.
Hmm.
After I got out and we talked, I was lucky enough for this man to be like, the bumper is not that bad. I'm not gonna like try to get a whole lot out of you, but he basically made a plan with me, a deal, and he allowed me to just pay him like $500 over a course of time.
Hmm.
And that was just a sense of relief because that's something that never happens. But he could have let me have it, really,
Yeah.
just because.
Yeah.
But
And in that situation, many people drive around with liability only and don't even realize that liability only coverage doesn't even pay you as the driver. It
mm-mm,
covers you in a situation to where if he wasn't a nice guy and he said, no, let's call the police, let's file a claim,
right.
it's going to pay them out of your policy, but you get nothing. You get
Mm,
nothing out of this liability only policy. So it's not necessarily in your best interest to carry that.
right. Like we talked about over food, like how liability basically gets you past with the police or on the road, and so you at least get the okay. You're okay to drive.
Hmm.
Um, Tell us about the importance of your deductible and having something that covers you a little bit more.
Yeah, so your deductible can get a little confusing. I think many people think that your deductible is your policy premium or your policy price. That's what you pay at the end of the year.
Mhm.
When actually your deductible is not a down payment, it's not your monthly payment, it's nothing. Your deductible is what you agree to pay out of your pocket when you want a claim to be filed or you need a claim to be paid out. So, kind of going back a few questions ago when we were talking about
Mhm.
damage estimates, if let's say, I guess let's take your situation by chance, if I'm the person that you hit and I said, yeah, this damage is probably about $500. If I have a damage done to my vehicle that's $500, but
Uh-huh.
my deductible is $500, no matter what the damages equate to, I agreed to pay $500 because that's my deductible.
Gotcha. That's
So
what you're
whether the damage,
responsible for paying for regardless.
exactly, no matter what, my vehicle could be completely totaled and I'm going to get paid out the complete value of my vehicle. I only pay $500. The damages are only $510. I only pay $500. Now that determines what the insurance company will pay. So is it worth, and that's why I say, is it worth filing a claim at something like 510?
Yeah.
Because this claim can stick on your record and it could potentially cause a surcharge on your future policies for another $10 that you probably had lying around in change in your car anyway.
Right.
So damage estimates are extremely important in determining if a claim is worth being filed. That's more common on home or on auto insurance, but on home insurance,
I was just going to
it's
ask
a
you about home.
it's a savior because what I typically see is about a 1% deductible of 1% of your dwelling. So let's say
That's
uh,
okay.
1 to 3,000, somewhere in there.
Hmm.
Uh, when you think about the damages done to your home, a roof would probably be what, 20,000 right there, and I'm only going to pay 1,000. That's a
Yeah.
deal. Versus if you didn't have insurance at all,
It could end
the
up
20 the
costing
20,000
10 to
is coming out of your
20,000.
pocket.
Yeah. Easy.
Exactly.
Real easy.
So your deductible is what you pay first, and then your policy takes care of the rest.
One thing I see commonly in houses is those abrupt water leaks or plumbing issues. And
Hmm.
so tell us a little bit about like some a minimum coverage you might just want for your house, just for like common things that just might happen.
Yeah, definitely. So this is another situation where each company does have their own limits per se. As I mentioned earlier, sudden uh, water uh, water backup or water emits into your house, it's one of the most common claims other than roofs.
Hmm.
So what I've seen in my experience in doing policy reviews, companies are now excluding it completely or limiting it to 5,000. And unfortunately, that's really just not enough. Liberty Mutual, I can speak to Liberty Mutual in Texas. We actually cover that at 100%. Now, this is also different from flood insurance. As I was mentioning with flood insurance covers outside water coming in. You need water backup coverage that covers inside water busting. So that would be your toilet overflowing, the dishwasher malfunction, any internal water backup is a completely different coverage.
So literally talking with a person will help you distinguish this. Because I literally, if I was moving into a home right now, I wouldn't be like, oh, I need water damage policy for my exterior and my interior. I'd just be like, I already have it.
Right.
do you get that thing often?
Yeah, absolutely. And it's unfortunate. And that's why it's really important to, ask a bunch of questions and look at those policy reviews like we were mentioning. And if you were to show me your policy and I see you have water backup excluded or limited to $500 or $5,000, think about just your flooring in a small bathroom. Small bathroom, if there's an internal water backup, you're in a small bathroom, you're looking at your floors, most likely your baseboards. Let's see what happens to the fixture. Let's hope no personal property was involved in that. That number easily surpasses 5,000.
Yeah.
Now your insurance company, since you agreed to limit it to 5,000, or that's what your company limits it to, they're going to say, here's $5,000 after you paid your deductible, figure it out. So it's unfortunate where those questions don't arise until you've been burned by them. So it is really important for your agent to not only, it's not just on the policyholder to ask those questions, because it's hard for us to know what we don't know. It's definitely up to your agent to help guide you through that and say, hey, listen to this coverage and listen to how common it is. Personally, I never exclude it, ever.
My buddy Mike is saying he had an issue just like that.
Really?
Yeah.
It's extremely unfortunate, but again, it happens more often than than one would think, really.
I mean, and you make us think about one of those other main things we talked about, and that is the cost versus value. And a lot of times I had to learn that, like the example earlier, that liability insurance isn't always the best. And so when I ended up having an issue like that and there was no coverage covered at all, really, it made me think twice about what I'm actually getting in my insurance. And so when I have things like my motorcycle now, it's important for me not to just pay the cheapest thing, but it's important for me to have the most coverage for instances like that, because you just never know what's going to happen. And so when you're looking at a house, this is your pride and joy. This is what you are looking at as an investment, and you're not wanting to have it actually be an emergency that you have to take care of that you can't necessarily afford. So let's tell them a little bit about the importance of sometimes footing that higher cost for a better value policy.
Yeah, I mean, you think about going shopping and decorating this pride and joy, like you say, your house. You don't always want to pick the cheapest shelves or the cheapest floors, because over time it's not worth the few dollars that you're saving.
Right.
We all know that you pay for what you get. And
you got that right.
and unfortunately, since insurance is one of those requirements, you just want to get it done. You don't really pay attention to what you're buying. And so you're like, oh, I'll revisit it later.
We have this happy-go-lucky sense of going about it as if nothing ever happens to us.
Exactly. And as much as I'm an optimist myself, you also have to have a little bit of the reality, unfortunately. Exactly. And I'm a person. Many people forget that your insurance agent is a person. We do know, I pay insurance myself. I know that at the end of the day, as a consumer, as a policyholder, I see the dollar amount that comes out of my bank account each month or each year. So I know that. And obviously we want to reduce the cost as much as we can. We don't want you to overpay, but you should pay for a great value. When you look in the retrospective, when you do file a claim, and let's say you have a total loss on your house, and it's so unfortunate, but those are hundreds of thousands of dollars that you saved out of your pocket, and you have that peace of mind knowing that your home is going to be rebuilt because you paid $100 a month. And when you look at the fraction of what you're actually paying versus if you self-insured, essentially, the
Right.
value is completely there. And it is important. You don't want to get super complacent, and that's why I always recommend, do a policy review every couple years, because prices change per company, and some companies come out with new products. Some companies have a better appetite for what you're looking for, and sometimes your needs change. So it is important to shop around and get the best price, but don't compromise $10 when you could be losing $10,000 in
Yeah,
coverage.
that that's well said. Well said, Samantha. Michael, tell us, how much did it actually cost you when you said you had to deal with it? And do you remember how much you were paying for your monthly policy at that time? And so, Samantha, you you make me think about, every most people are driving a car, living in an apartment, or living in a house, and they sometimes pay for these things separately in different places. What are the benefits of at least getting a bundle package reviewed? Because I mean, sometimes maybe it's not always beneficial, but let's talk about the beneficial parts of bundling things together.
Yeah. Talking specifically to price, most companies offer the biggest discount with that bundling discount. You always see the commercials saying, bundle your home and your auto. It's
Yeah,
not necessarily because we want all your money. It's because it's the best value. It does provide the best discount available for you. Outside of money, you also want to think about the ease of having one person to call, one policy to worry about. You have the same person that knows exactly what's parked in your driveway and what house is attached to that driveway.
right.
um, you're speaking to the same people that know what's going on. However, you're not tied to bundling your home and your auto, and there are some cases where maybe it's cheaper for you get the better value with another company, and your home is better over here. And that's why I'm really glad that as Liberty Mutual agents, we have that option. I can set up someone on a different company with their auto insurance and their home insurance with Liberty Mutual, and you still have one agent to talk to, but you have the benefits of two different carriers and two different rating systems. So a broker is a great contact to have, so they can check and pretty much do the shopping and do the busy work for you of calling every person. I can pretty much just check 15 companies at my computer right here.
So that's the benefit of like working with an insurance broker or insurance agent with a brokerage,
Definitely.
because you have an access to a multitude of carriers. And so, we spend a lot of time getting off work, in between work and jobs, calling just to compare rates. And so
Hmm.
save yourself some time, make it a one-stop shop with Samantha, and let her check out that insurance policy. It is free consultations too as well, right?
Yeah, absolutely. No obligation quotes. Quotes actually don't. It's on like a credit check where you can only do it every couple years and it affects anything. A quote is a great way to just do a policy review. And again, I'm a person. I can advise you when you've got a really good deal where you're at. That's the worst news I can tell you is you've got a really good deal. And the best news I could tell you is I found a better deal for better coverage over here. No harm, no foul. There's no obligations on quotes. If you haven't taken a look at your insurance in the past 3 to 5 years, definitely now is the time.
I like that. I like that. And like in real estate, always, we say time is of the essence, so the best
Exactly.
time to do anything or take any action is right now.
Exactly. Exactly. And things
Um,
are constantly changing, lives are constantly changing. So it's good to keep your insurance agent in the loop.
you got that right. You got that right. Michael, you said you're still getting quotes. What kind of quotes are you hearing? Okay. So let me ask you this, Samantha.
Mhm.
What what is the difference, or is there a difference between the bundling package that we're talking about and an umbrella policy? Are those two different things?
Yeah, absolutely. So an umbrella policy is actually its own separate policy. So you can actually bundle your home, your auto, and your umbrella policy. Your An umbrella is pretty much just like a nickname for a PLP or a personal liability policy. It's something that attaches itself to your exposure, basically.
So
It,
like in real estate, when you own possibly multiple properties, is that something that is usually discussed, having an umbrella policy that covers all of those under one policy instead of separate policies for each one of them?
Exactly, exactly.
Okay.
So it's perfect for landlords because you have your home insurance and you've got your liability built into that. Now, if you've got a separate policy or I'm sorry, a separate property, like you were saying, an investment property, something that you rent out to tenants that you constantly have people in, you don't necessarily know who's going in and out each day, each month.
Right.
Your liability is limited to what's on your policy. When you have an additional liability policy or your umbrella policy,
Hmm.
you've got what you have on your home insurance plus this liability. So you've got, for numbers' sake, we'll say you've got $300,000 on liability on your home, but you have a $1 million liability policy in your back pocket. Now you have 1.3 million to go through. And this
Coverage.
1 million attaches itself to all your properties, any vehicles and any drivers that you have, and any watercrafts, any RVs, any other vehicles, if you've got an ATV, if you've got any off-road vehicles, any liability exposure that you have
Hmm.
is covered figuratively by an umbrella of this extended liability. So it gives you that additional coverage.
Like you said, I like how you use it in your back pocket because, sometimes, well, when I hear that, I hear basically an insured insurance policy. Like that's what I just comprehended in my head. Like this is backup for your backup.
Essentially, that's pretty
Yeah.
much what it is because there are unfortunately cases where there's someone can get hurt on your property, and it could equate to over 300,000. And unfortunately, when that happens, you go to court and they're going to come for your assets more than likely,
Mhm.
to make up for that additional money. Now, if you
Right.
have that umbrella policy, that gives you that backup and you can pay out of that policy as well. And those can be fairly inexpensive. Sometimes they're just like $100 or $200 a year. So it's perfect for those landlords. It's perfect for people with swimming pools, perfect for people with young kids that are maybe away at college, that are a little bit riskier. I mean, we all had our young days
Yep.
without our parents knowing, when we were still very much on our parents' policies.
And
Uh,
resilient.
exactly. Exactly. So, yeah, absolutely. It offers peace of mind for that additional peace of mind.
I like that. And so even I guess in saying with the umbrella policy, you can, I guess, still have bundles just using, let's say I have three real estate properties and I have this umbrella policy. Are there cases where I would bundle up this property separate from the other properties, or is that something that if you're talking bundling, you would just bundle it all under that umbrella policy? And I don't even know if I'm asking this question right. I'm just thinking of things as you share knowledge.
Yeah, definitely. So each policy and each property will have their own policy number, and this umbrella policy will have each of those properties' addresses listed, as they all have their own um, exposure.
Uh-huh.
So,
Uh-huh.
you've got this policy. We can just pretend it's like a document of a $1 million policy, and you've got 123 Main Street. You've got 456 Boulevard, whatever. You've got all these covered. But since this is your backup, you've got your primary policies on the actual dwelling and the homeowners insurance and the landlord policies. Um, to actually cover them. So you will have separate policies for each of them, but this is just a way to kind of keep everything in line and add that backup to everything that's listed in your name, all your assets.
I like that. I like that. Because there's of course occasions that things change. Not only that do we have, children, or not only do we upgrade our car, but there might be circumstances where we might just go buy a boat
Mm-hmm.
that we added. So
Mm-hmm.
we could always reach out to our insurance agent and let them know, hey, I just added this boat to my asset collection.
Yeah.
How much, what is the cost or value of this,
Yeah.
So I think that's a really important thing. Like you said, to always follow up whenever you're adding new things that you feel like that are exposing you.
Mm-hmm.
So perfect way to put it.
Mm-hmm.
Uh, you know, let's go into not having coverage. And one of our favorite things, life insurance.
Yeah.
And can you tell us about how does life insurance affect people after death? And that's with life insurance versus without life insurance.
Mm-hmm. So I would probably start, painting the picture of what does it look like to not have life insurance. Unfortunately, there's a lot of final expenses whenever someone passes, and someone could, you're buying a policy on yourself. Not only do you have any debts or liabilities that you have left behind that are in your name that would be passed on to your family,
Mm-hmm.
you don't necessarily want to pass on anything negative, especially on a time of mourning or time of sadness where
Right.
someone just lost a family member, but now we've got to tie up all these loose ends. In addition to what you've kind of worked your whole life on, people want to leave behind their legacy. And, we always think about, oh, I'm going to leave this property back to my kids. I'm going to leave this land, this boat to my
Because we
kids.
talk about wealth all the time, and
Mhm.
we want to leave this generational wealth for our
Exactly.
family or our children or offsprings. But are you protecting this wealth that you want to actually pass down? Is
Right.
that right,
You're
Samantha?
purchasing all of this, and you're thinking in your perfect world where you may die at 100 and everything's paid off and everything's taken care of. Your kids already went to school, you've got grandkids, everything's good. But unfortunately, the reality is that it doesn't always happen that way. There are times where you're still financing your house, you're still tied up in student loans for your kids, you're still tied up, excuse me, in your own student loans. You're dealing with everything you're going through.
Mm-hmm.
And unfortunately, those things that you're still financing are going to get passed down because it wasn't purchased outright like you pictured, and it didn't end the way you thought. And then on top of everything that you work so hard to have, no matter what, you're going to have these final expenses of a funeral. Whether if you want to go the more affordable and the more economic way, and some people prefer to be cremated, but unfortunately, some people would prefer a proper burial, a more ceremonial type funeral. But unfortunately, some people's budget just doesn't allow for that to happen. And what you thought, oh, I've got $12,000 in savings that can go to it. Who's to say you didn't have any medical bills leading up to this that needs
Right.
more attention versus the funeral? And that's why you see so many people with the GoFundMe pages, and it's really devastating to know that families are going through financial hardships on top of their emotional hardships. So life insurance without coverage, it does look like the GoFundMes, it does look like the fundraisers, and it does look like a very informal funeral, and it does look like debt left behind. When you have life insurance, those things are taken care of. And if it's not everything, let's say you took out a small policy of $50,000.
Mm-hmm.
$50,000 is a lot more than your family had before you had passed. And
Exactly.
sure, me as the person that paid for the policy, I took out this life
Right.
insurance policy on me. I'm not going to see that $50,000, but I know the family that I care and I'm leaving behind will see that $50,000. And that's the peace of mind that you can't ask more for.
I like that you say that. You know, when you actually pass away or die, a I want the word coming to my head is presentation, but that's not what I want to say. Your name is blasted publicly to allow all debtors to come forward, and so many times we don't know what kind of debt our mom or dad or spouse had. We
Mm-hmm.
just know that the few bills that are basic needs that they told us about. But we don't
Exactly.
know that you went and got that car auto loan from Quicken. Well, let me not say any names. We don't know you went and got any loan
Mm-hmm.
from a second or third lien party. Because
Right.
sometimes there's
Exactly.
not only one lien you can have on something, there's multiple liens that
Mm-hmm.
you can have put on something. And so when you end up passing away, those people are all able to make claims to whatever money or assets remains in that person or individual's name
Mm-hmm.
prior to any offspring being able to claim any of that wealth or any of that money or cash left over. And
Yeah.
so that's always important to just be aware of is if you're not asking them about their debts, at least, or excuse me, if they're not telling you about their debts, at least attempt to ask and
Mm-hmm.
try to figure out that all bases are covered when you're getting that life insurance. Because,
Yeah.
you know, as I mentioned, we talk generational wealth and we can actually succeed and have generational wealth passed down simply by protecting ourselves with the coverage of life insurance. And
Mm-hmm.
so, you know, I would say elaborate on that a little bit, a little bit.
Yeah, definitely just opening up the conversation and kind of exactly what you were saying, taking into account our parents specifically. We're busy being kids, even if we're in our 20s, 30s, and 40s. We
Mm-hmm.
don't know exactly what financial that our parents are dealing with.
Right, right.
But us as kids, is we're likely going to be the ones left to manage it, them or their spouse if they have a surviving spouse. And who knows, when it could happen, where it could happen, how it could happen, any of the above. The
Mm-hmm.
last thing that you want to worry about is the financial hardships that come with someone passing. I think the sigh of relief, and it's truly devastating, just seeing someone lose someone that they care about so much, and then having to plan a fundraiser or plan a GoFundMe or put their own money into what they can and pay off what they needed. But just I think simply opening up the conversation. It is an uncomfortable conversation. Unfortunately, no one wants to speak about death
Right.
or when you have a spouse, you don't want to speak about a life without them, right? That's the person that you want to grow old with.
It makes you fearful. But
Right.
what would be even more detrimental is if you lost them and that was already fearful to you, and you had to come up with a plan within a few days or week just to accommodate a financial burden and the anguish that you have at that very moment instead of properly preparing previously. You know, so that proper preparation is always something that you want to at least consider because Samantha can elaborate on this a lot more than I can. But let them know the difference between getting insurance when I'm in my 20s and how much that could cost and how much coverage I could have versus, you know, now I think I want to get insurance in my 50s or 60s and how much that could cost and how little coverage I could have.
Yeah, definitely. I mean, I think I can speak to, being in your 20s, we all think we're invincible, right? Like we all think we're going to live to 100. Being in your 20s and your early 30s, you all think, and we don't have a ton behind our names. We haven't spent so much time building our assets. We don't, there's a lot of people that don't have a house yet, that are barely financing a vehicle, that
Right.
are in the middle of their student loans. And we're just thinking like, we don't have assets to protect. We don't, what am I, what is my life worth?
Right.
What is it? what is it worth right now? Sure, maybe down the line, but for many people in their 20s, or I mean, preferably straight out of the womb almost, you are the cheapest to insure at that moment, health wise. So,
So
again,
the sooner you get it, the better.
exactly.
Um,
The better the price would be. There's a lot of times, there's, as you get older, the closer you get to death. So the likelihood that the policy would pay out is more likely. It increases as you get older. You're also more prone to health issues, which again makes you a little bit more susceptible to falling to that illness.
Risky.
Exactly. So, in this prime age that we think we're invincible in,
Mhm.
that's the perfect time to buy a policy that will last us to 100 because we're invincible, aren't we? We're going to last to 100. So me being at the best shape of my life, you hear everybody in their 40s, 50s, 60s say, I remember when I was 25. I was
Yeah.
in the best shape of my life. I remember when I was 35, best shape of my life. And there's a reason for that. Like it's not coincidental. Whether or not I have a ton of assets, maybe I don't have a house, maybe I have a really old car, maybe I'm not even married yet, maybe I don't have kids, I still can
Speaking
take
of my
that.
life, no.
But you still have a value to you, and maybe your beneficiary, the person that gets paid out on your life insurance, is not your kids or your spouse yet. But I know
I
for
put my
me,
nephew down.
right, like there's someone that is someone that watched out for you. Like my mom is one of my beneficiaries on one of my policies because she paid for the education, she paid for
Yeah.
and that's the way that I can repay her in case anything were to happen to me
Yeah.
immediately. So getting your foot in the door, whether you're 19 or 25 or 35 or even 45, you still have plenty of time to get in. It's never too late to get that policy going, as long as you get that policy going. You can start off with something small, and as your value increases, you can adjust the policy accordingly.
And
But
your
I know
lifestyle changes.
exactly, exactly. You have the spouse, you have the kids, now you have the house. That $25,000 policy that you got when you were 25 is not as valuable anymore,
Right.
but you've got the rating, you've got the health on that policy that it was. So you can convert it and talk to your agent and talk to someone that can walk you through that wave of life and adjust your policy accordingly.
You make me think about something that you highlighted during one of our last conversations, and that's I forget what this program is called, but some people feel I don't really think I should pay for life insurance because what if what if I could just save that money, or what if I spend all this money on this life insurance policy and I don't need it when it runs out. And so I think you were sharing a little bit about at the end of a policy, even if you haven't reached death, that you get some type of payout from what you paid into it. Can you tell us a little bit about that?
Yeah, so there are many different types of life insurance policies,
Mhm.
and even including myself, I sell many, many types of life insurance um, to, again, better fit either one's budget or one's needs. A great one that I think you're mentioning is the return on premium. So, again, some people think
Turn on premium.
I'm invincible. I'm not going to die anytime soon. But you still see the value in life insurance. You still want to take out that peace of mind and know that you're covered from this time. So if
Right.
anything were to happen to you in the next, let's say, 25 years, you have a policy. But let's say you have a 25-year policy and you don't die, you outlive the policy. There are types of insurance policies that will give you your money back since you didn't use it. Obviously, if you were to pass away in those 25 years, you would get the full payout, you would
Right.
get the benefits. But in the end, if you don't die, you get everything that you put into it back. So at that point, what do you have to lose?
Right.
So
And
that's
you
a
can get a new
really great,
policy with you.
exactly. And that's a really great policy for someone that is a little bit more that really sees the value in life insurance because as any other product, you pay for what you get. So those policies can be a little bit more expensive, but maybe paying $150 a month is worth getting all that money in the end. But
And
if your budget allows for maybe only $50 a month, we can get you another policy. We can get you going with something else that won't necessarily pay you back, but it does give you that peace of mind for that time frame that you're looking at as well.
I like that.
And there
You know,
are different types, and just to even touch on the two other main types of policies. So there's term policies that, we're more speaking to about the 10, 15, 25, 30 years. You only pay for that amount of time. You're only covered for that amount of time. Then there are whole life policies that take you to death. It doesn't matter if you die tomorrow or if you die in 40, 50 years. You've got that policy covered until then. So it doesn't run out after a certain time. It just stays with you until the life of the policy is the same as your life.
okay, okay. And
So there's different types, and each company offers each one. So
with each one of those is the option to have that return at the, oh no, there you don't need a return if you're at death. So I think
yeah.
I answered that question by asking it. Okay,
Yeah.
okay. So I would say in someone's case, like that we let's say we are in our 20s and 30s. Term, does that sound like it's a better option for us oftentimes, or is that something that's more used now? Term is because you know time frames can affect the price, right?
Right.
And so
Right. So
getting
similar
coverage
to like a
for 5
mortgage.
years and getting coverage for 15 years and getting coverage for 30 years can all be a price. But let them know not such a hefty difference, because at the end of the day, we're dealing with having the um, um, protection to cover death.
Exactly. Yeah. So there are different term lengths. So, for someone that is, I'll take myself into account, I'm 25. So a 30-year policy would go really far for me. And that might be really all that really concerns me. 30 years will take me to 55. By
Hmm.
that point, I've probably already hit the peak where I've got kids in college, I've got a house, I've got kids in college, I've got a house, I've got the cars. I think I'm repeating myself, but I've got the peak of where I'm at. And then
Right,
you start to go down on your expenses. You paid off the car, you paid off your kids' school, you paid off everything, and now I'm at the 30-year um, age of my
policy.
policy,
Hmm.
and my liabilities have gone down. So I
But your
can
risk is
revisit.
also increased as well.
Exactly. So I can revisit that policy and decide, do I want to extend it for another 20 years, and maybe do I want to minimize the amount of coverage that I have? Do I really only need to take care of my final expenses, my funeral costs? Or, do I have plans on going back to school? Do I want to pay for my grandkids to go to school? What do I want to leave behind? So term policies are great because they kind of force you to revisit the policy
Mhm.
and reevaluate everything.
And we
Um,
like that flexibility anyway.
exactly,
Yeah.
and it kind of allows you to kind of move around with the policy, like what we've been saying. Um, but term policies are also cheaper because it's not necessarily guaranteed you're going to die in those 30 years.
Right.
So it's less risk for the insurance company to pay out, versus something that takes you to death, where those can be a little bit more expensive because it's guaranteed to pay out. So it does depend on, again, your budget and your needs, where you're at.
I like that. I appreciate you so much. And insurance isn't always a easy topic to talk about, but Samantha, being that she's passionate about what she does, again, she can get you a free consultation. We can't help everybody, but there are those individuals that we can help that she may be able to save you some money. I had her visit one of my clients' policy that she had got, and she ended up saving them nearly $200 between the two of them, I believe, which was just a great benefit, because it was $200, I think, a month. It wasn't
It
anything that
made a
was,
game.
it wasn't anything small. So
Yeah,
$200 a month, that adds up to what, $1,200 a year. And so
yeah,
that
at
was
least.
that was just really a sense of relief to be able to refer someone who could provide that type of service and that kind of reduction to someone that is a really good friend of mine.
Yeah, yeah,
Um,
that was great. And I think, insurance agents and even real estate agents like yourself, we serve as translators a lot. We take the hard questions and really simplify
Ask
them.
insurance questions if you got them.
Yeah, absolutely. Um, we're the translator. This real estate and insurance and medical insurance and so many other things that we have to deal with as adults, we're not necessarily taught in school, and if they were, it was super surface level. It was just enough to get us street legal, just enough to get us
Yeah,
in the house, just enough to do this, but
just
not
enough to
enough
get
to
by and
really
survive.
this. Exactly. And having a resource, and I have a lot of family and friends that it wasn't necessarily in their best interest to switch just yet, but I'm
Mhm.
still able to help and answer questions and be a resource for them, just as I'm sure you are, where maybe you've already sold a home to a family or friend of yours, and they still hit you up for questions because they
Yeah.
we're constantly learning. So I think us being agents and being serving our clients in the best interest and translating these difficult scenarios and these what ifs and these just the endless situations that can pop up is extremely important, because we really only see commercials, those Liberty commercials, we see progressive commercials, and that's the beauty of marketing, but unfortunately that's not the reality of the policy. So you want someone to guide you through there and ask those questions that need to be asked.
I like that. I like that. So, getting a little closer to wrapping up, I do like to ask just a few questions to everybody. And, in this segment, it is it's really important because when I look back on my own personal life, um, I was I would look at some things that I would change. I look at some things I wouldn't. And in some cases, I would just want to be more informed. And so in this segment, it's called "What Would You Tell Your 18-year-old self?" And it could just be a one-word sentence. It could be a one-word sentence. It could be a sentence or one word. But what would you tell your 18-year-old self?
Easily just ask questions. It sounds easy, but there are, myself included, that we can walk around and we're like, oh yeah, I know that. Oh yeah, I know that.
Just
But you don't necessarily know what you don't know.
right,
And some people get embarrassed to ask questions. And unfortunately, some people deal with rude insurance agents and rude real estate agents that they they can almost treat you like you're dumb when you're just trying to learn,
right.
and that can deter people from asking a question. So I think just being comfortable enough with the person that you're working with, just ask questions, know what you're getting yourself into, and if I'm giving you my money, I should get a question or two answered.
I
So
agree.
ask
Now I'll
questions
wear you out
with
with questions.
anything
I
in
don't
mind.
give. I don't care. I will wear you out with questions if I need to.
Oh, me too.
Um,
Oh, me too. You could be
see,
explaining exactly what you're doing, and I'll say, okay, well, why are you doing it that way?
yeah,
And I'm just trying to learn, because this is something, wealth is super important, and that wealth of knowledge is irreplaceable. So I'm just trying to learn, because I guarantee if you answer my questions now, our conversation is going to be a lot quicker next time.
exactly. You just mentioning that word wealth. I think about a lot of people. I love when people say they're out here getting the bag or chasing the bag and getting to the money and all this stuff. But I always try to put into perspective what their idea of getting money or getting to the bag is. And so let's just take $1 million, for example. I'm always like, how do people plan to get to that $1 million? Do they actually need to go work hard enough to have $1 million in their hands, to have $1 million in their bank? Or are people going to be so well informed between their lovely insurance agent and their realtors that they can actually end up with a home worth $300,000 that makes them worth $300,000 on monthly payments that can be anywhere from $2,000 a month to $3,000 a month. So for $2,000 or $3,000 a month, you can have a home for that's worth 300,000. That makes you worth that. Couple this with having an insurance policy that you pay $20 a month for, $30 a month for, that gives you $200,000 in coverage.
Mm-hmm.
Immediately, with just this $2,000 or $3,000 home payment, and with this insurance policy, you immediately make yourself worth $500,000 already,
Mm-hmm.
and you're halfway to your goal of reaching $1 million.
Mm-hmm.
Because ultimately, I don't think we really want $1 million. I think ultimately we would like the idea of having or being worth $1 million. Because
Mm-hmm.
I once I seen that it's cheaper to buy, something worth 500,000 than to make 500,000, and
Mm-hmm.
it's worth less time and energy. And
Mm-hmm.
so I guess for me, I would have liked to educate myself a little bit more on knowing the difference between the what is worth and actually needing the hard dollar amount.
Right, right. Like you could be literally sitting on $1 million. It's just not in your pocket.
Yes, that's better said. I tend to circle the wagon.
Yeah, I think that's I mean it's super important, and it's just again kind of tying back into what I said, where if you ask those questions you can learn that, and you learn it much faster, and start to build that portfolio and start to build that wealth now rather than later.
Exactly, exactly. The next segment that I love to go into is, one thing that got me into real estate is, as a young boy, I used to take the money order for my mother for the rent, and I go right next door, and I hand it to our next door neighbor, and I'd go back to the house, and I'd be like, "Hey, why are we taking a check to our next door neighbor?" And my mother would be like, "That's the landlord." And I was like, "What's the landlord?" "The landlord's the owner." And I was like, "Well, how do we live next to the owner if they're the owner?"
Yeah.
And so for me, after she explained, like, well, the landlord, although they're the owner, they're renting this other part out to us.
Hmm.
And when you start researching, when you get into real estate, you see how profitable it is to be a landlord.
Hmm.
And so sometimes in really good markets, you can have a mortgage payment as a landlord that could be half the price of the rent you can charge in that area, or a
Hmm.
quarter of the price that you could charge in that area. And
Hmm.
so it made me really passionate about building not only my rental portfolio, but it made me confident in home ownership and ownership in a sense. And
Hmm.
so what I like to ask is what makes a house a home for you? Because what makes a house a home for me is the knowledge of the asset that I have, and the love that I'm able to share in that home, or the people that come into it. So what makes a house a home to you?
What makes a house a home for me is just peace of mind, knowing that I can relax comfortably in on my couch, that there you see, I think we always grew up with our parents knowing that their mind is always racing. Where's this money going to come from, or how am I going to pay this, or oh, this bill is coming up, I need to take care of that. And knowing that is normal, beyond normal, but knowing that if anything were to happen to my home, myself, my family, my cars, anything falls into that, I know in the back of my mind, I've got that peace of mind that we can go back to where we were. I can restore and not change and uproot my family's lifestyle, in case some a natural disaster happens. Something happens to me, and my future family's stuck dealing with it. That peace of mind can just allow you to relax. And if you can relax in your own home, then that's what you want, right? You want to relax in your own home.
If you can relax in your own home, you can actually walk out of it and conquer the world a
Enjoy.
whole lot better.
You can enjoy because for many people, the biggest thing that they buy in their life is a house.
Yeah.
Enjoy it. Enjoy it. And know that you're covered in all areas, not just in insurance, but, relax and have that peace of mind in many places of your life. And you can put your guard down and you can relax and enjoy your time where you put your money.
I like that. I like that. I mean, it's been a pleasure speaking with you
Thank
about
you.
insurance. I know it's not, like I said, it's not always easy, but as I said, everybody, Samantha is really passionate about what she does, and you know, she'll take something. If she can help you, she's gonna help you. If she can't, she's gonna direct you elsewhere. She's gonna tell you that you got a good policy. So don't take for granted asking those questions to somebody who's well versed, and you know, take advantage of someone who's just available. Because me personally, I hate to go communicate with technology. I don't like communicating with technology. I like communicating with people. In some instances, it makes it a little easier to communicate with technology. But what I've learned from my personal experience, I don't always want easy. Sometimes I want the more difficult thing, and sometimes that's to have that hard conversation with somebody who can uniquely give you what you need in your policy.
Mm-hmm.
And so, in closing, I would just say, you know, proper preparation prevents poor performance. So when we have that proper protection, we can have some great performances during those unfortunate circumstances, such as that might come upon us, such as collisions, such as flood damages in our homes, and the many other things that can be covered by good coverage and insurance. And so, with that said, Samantha, would you like to tell us a little bit about where people can find you, how they can get in contact with you through social media?
Yeah, absolutely. So a good way to always get in contact with me is my cell phone. I'm a born and raised Austinite, so I've got a 512 number,
Hey.
uh, which can be a little bit rare to find now. So my personal cell phone is 512-769-1823. That's usually the best way to connect with me. Send me a quick text. Or even just leave me a quick voicemail or give me a call, and we can just chat. I'm also, if you should be able to just Google my name as well, and that'll lead you to my actual Liberty website,
Mhm.
and that would be a great way to connect with me there as well. But Thomas is friends with me on Facebook. That's another
Yeah.
way to kind of just stay up to date on my life and allow me to stay up to date with your lives, and see, you know, if we're a good match. I love to do business with people that I like. So
Yeah.
everybody
Yeah.
likes to do business with people that they like. So
Absolutely.
great way to get in contact with me. And I mean, Thomas, you have my contact information. I can always leave it somewhere as well. But
Yeah, I'll get it plugged into the description for the
yeah,
video for sure.
definitely. So yeah, phone, email, text. I'm with the times. I can send an emoji or two. That's a good way to contact me.
Yeah, awesome, awesome. Any last words?
I really appreciate this conversation. I think
Likewise.
it's just scratching the surface on so many what if situations, and each person is needing something different. You know, your insurance policy is different than mine with reason, not because you had a worse agent or a better agent. We have different needs, so it's important to speak with someone. Just anyone that you trust, whether it be myself or if you know somebody else in the industry, spark up those conversations and ask those hard questions and communicate. So I think this is a great way to kind of open up those avenues of this conversation. And I think, what you've got going is really great here. So I appreciate you having me on.
You're more than welcome. It's been a pleasure, always, and look forward to having you on more. You know, don't be afraid to go and add add Samantha, Facebook, also Instagram as well.
Mm-hmm.
And I'll make sure I get those handles in the description when I post it on YouTube. Make sure you like, share, and comment. All feedback is appreciated and needed. And any way that I could help someone build a bridge to something else that they need, I take pride and pleasure in that. So like, share, comment. You can find Inquiring Mind on Facebook. You can find Inquiring Mind on Instagram. You can find us also on Spotify and Google Podcasts. You can also now find us on YouTube with more videos coming soon. And so thank you again for stopping by. And this has been a wonderful discussion. And we'll talk soon. Samantha, thank you so much, ma'am, for stopping by and gracing us with your presence.
Thank you for having me on. It was great.
Absolutely, absolutely.
I look forward to, sparking some conversations and connecting a little bit more about this.
Yes, ma'am. Let's do it. We'll talk again soon, okay?
All right. Thanks so much.
Thank you. You have a great rest of your day.
Thanks, you too.
Bye.
Bye.